used for extra confluence. Okay, confluences of events. Can you understand that? Yeah.
Okay.
Okay. So see, even in this example, okay, where did price come into? Now there is a very high probable setup. See that? Where did price come into? Right into the midline. Okay, we have liquidity. Okay, we have the QM level. We have the Asian midline. All of that. Look at the move there. Bam. A very high probable setup. Okay, like you know the QM levels, right? The QMLs. Bam. This is where the QM is. And then liquidity got built up, tapped, and it goes. Okay, tapped and it goes. So this will be a very, very high probable setup. Asian midline is also here. Okay, so can you understand that? Yeah. Okay, that's about that. And then let's go into high time frames once again. So now you know why we are not gonna trust this low to hold, right? We know why now you know a lot of liquidity is resting below that low. So you are not gonna expect that to hold. Okay, you're not gonna expect that to hold. So we can't take this as the liquidity and then wait for this to play out. Because look at this. How far away this is from this low. 30 pips away from the point of interest. So there will not be 30 pip manipulations, right? Who will do a 30 pip manipulation? Because if it now after taking this low out, if it keeps dropping for 30 pips, then the people that had their sell stops here will be in deep profits, right? Will be in deep profits. Okay, so that won't happen. They will quickly, after taking that low out, they'll quickly pull back up. Okay, they will quickly pull back up. So you have to look for a point of interest that is closer to this inducement. Okay, closer to the inducement. Now, actually, you don't even have to have a point of interest. If you know that this is liquidity, simply what you can do is as soon as it gets taken out, look for a bullish QM to form, buy it here. That's it.
Okay.
You can buy it here. Okay, so you don't even have to have a point of interest. But yeah, if you really want to, you can look for a point of interest. And if you pay close attention, you can see from the high of this wick to the low of this wick, there's a little imbalance left.
Yes.
See that? Now
Yes.
this is not an accident. Okay, this is nothing random. They did this on purpose. Okay, they did this on purpose because now they have a reason to come back down, right? Now they have a reason to come back down and fill the imbalance because there is a lot of liquidity resting below that low. Okay, so this is how I would personally refine it. I will refine it to this wick. That's it.
Okay.
Okay, my entry on the imbalance close price action, my stop loss below this, below this wick right here, or as the body of the candle that has the imbalance. Okay, this is how I would personally refine it. Can you understand that? Yeah.
Yes.
Yeah,
But
like this.
I have some doubts because we can take that week also as a dimension, right?
Yeah, you can even take this week.
The
You
whole
can
week.
even take this week. Okay, yeah, you can even take the whole week. Okay, but for me personally, I will always look for the one that is look for the point of interest that is closest to the inducement. So what's the closest one? It's the imbalance, right?
Yeah.
The imbalance is the one that is closest, not this week. Okay, not the week, the imbalance. Okay, so I'm gonna use
So
the
you're saying
imbalance
that
here.
we should
Yeah.
look for some sort of imbalance and a POI
No, it's like
that is
this. You have to use the one that is closest. See that?
okay.
You can use the one that is closest to the inducement. So yeah, what's the closest point of interest you have? It's the imbalance, right? Not the
Yes.
wick.
Yes.
Not the wick, it's the imbalance. So we can use that imbalance there. Okay.
Okay.
And
So
then
we are using the 4 hour time frame for identifying these kinds of higher time frame structure, right? Or
now anything, any time frame. Okay, now I'm just going to show you the example of this thing. Okay, I just wanted to show you an example only because price is fractal.
yes.
Okay, price is fractal. So the same thing happens on every single time frame. Okay, every single time frame. Okay, now this is not only applicable for lower time frames. Okay, so
Okay.
you can do this. Stop loss here. Give me a second. Like, sorry for that. I'm having a little cough today. Okay, see there? And we're targeting higher prices. Okay, give me a second.
Okay.
Okay, can you hear me, bro?
Yes.
Sorry for that. My voice is a bit off. Okay. So we're doing something like this now. When everyone else is wanting to buy from these areas like this, Okay, with their stop losses all below this low, we're gonna buy below that. See that? We're gonna buy below that now. Why would you want to go to a lower time frame? It's just 4.6 pips. See that? Why would you want to go to a lower time frame? Okay, because we use lower time frame only for refinements, right? Now, why would you want to refine this? This is a 4.6 pip stop loss. Okay, so then what happened? What happened? Right into the entry and then look at the rejection. Look at the rejection. Okay, this is that rejection you will get every single time you get the right entry. Okay, look at the rejection. Okay, like instant profits. As soon as it taps you in, you're in 40, yeah, 50 pip profits. Okay, and then where are we targeting? We're targeting this high itself.
Okay.
Okay, we're targeting that high itself. And if you look into market structure now, what happened? Higher highs, higher lows, higher highs, higher lows, higher highs, and a fake breakout structure. See that?
Yes.
A fake breakout structure right here. Now, what did they do? When they broke below that low, now everyone would have looked at this as a breakout structure, and now they will be wanting to sell from these areas, right? Expecting moves like this.
Yes.
Can you understand it? Okay, because why? This was a breakout structure for them. Okay, so then what they would do is they will, yeah, they might look for points of interest from these areas, and they will be looking to sell this thing, right?
Yes.
They will be looking to sell this thing from these areas. Okay, and look at what happened. Look at what happened. Okay, it started going up. See, this is the reaction you will get. Okay, it will shoot up. It will shoot up, and when price gets into these areas, look at that. Okay, what happened? Look at the drop. Why are they doing that? Inducements. Inducements. See, even a breakout structure. Even a breakout structure. So imagine after this breakout structure, how many people would have wanted to sell it from these areas? See that? How many people would have wanted to sell it from these areas? A lot, right? A lot of people. Now, remember, in these types of candles, the volume is always in the body. Okay, so you don't have to mark out the whole thing like this. You can just mark out the body. Okay, so yeah, everyone will be willing to sell from these areas. But if you take a look into the bigger picture, okay, look at all of this liquidity getting built up, a fake resistance. See that? Every single time price comes into that level, what happens? It drops. It comes into that level, it drops. See that? So that's a retail resistance, right? That's a retail resistance. So we are not going to trust them. Okay, that should be our target. Okay, the retail resistance should be our target. Now look how risky sells from this areas are. Very risky, right? Very, very risky because a lot of liquidity is resting above that high. Okay, a lot of liquidity is resting above that high. Like even I took this sell here, no problem with that. Even I took this sell here, but I'm not gonna hold this into these areas. Okay, because keep in mind the exits are more important than entries. Okay, like anyone can enter anywhere, but where are you gonna pay yourself? That's the most important thing. Okay, now imagine if I took a sell here and did not take anything off until it gets here. What happens? I'm going to get stopped out, right? Because look at all of this liquidity. Okay, and since we are intraday traders, we could trade this thing because that's see that? That's an 80 pip move. Okay, that is an 80 pip move. So for an intraday trader, that's more than enough, right?
Yeah.
That's more than enough. Okay, so yeah, even I took it and I closed everything from this imbalance. That's it, because of all of this liquidity. Okay, because of all of that liquidity, and I closed everything. Then price started retracing. Now imagine how many people would have wanted to sell it from these areas. And look at the reaction once again. Look at the reaction. Why? Liquidity. More and more liquidity is getting built up. Now people might have taken this as a QM. Stop hunt, breakout structure, and they will be wanting to sell from these areas. But then again, you have to always look into the liquidity. See this? A lot of liquidity is getting built up. So then again, I told you, right? If liquidity is getting built up, what are we going to do? Look for a point of interest above that because that's going to be high probable, right? Liquid above an entry above the liquidity. I told you. So if you look at this, can you see this imbalance? See that? So why did they leave it there? Okay, nothing random. Nothing random. Now you might be looking at this imbalance too, but this imbalance was actually filled on most of the brokers. Okay, from broker to broker, the information differs. Okay, so always, yeah, trust the broker that you're using. Okay, trust the broker that you're using, like the one that you use to execute your trades on MT4. Okay, so let's say if it's IC market, see if IC market has filled it. Okay, but yeah, on most of the brokers, this thing right here was filled. So this was the one that was not filled. Okay, so if this is liquidity, this is going to be high probable, right?
Yes.
This is going to be high probable. And then what happened? Now imagine how many sellers are trapped here. Fake resistance, smart money traders, the ones that are trading market structure, everyone is trapped here, right?
Yes.
Everyone is trapped here. And then what happened? Straight through it. Okay, straight through it. Okay, now I honestly I took this sell here, but I couldn't take the I took this buy here, but I couldn't take the sell. Okay, I could not take the sell here. Okay, because yeah, I think I did not trade that day or something. But yeah, what happened? Tapped into the imbalance and now it's coming back down. See that?
Okay.
Just a little tap into the imbalance and it's coming back down. Now, why was that imbalance high probable? Because of all of that liquidity. Yeah, I'll have to refresh this every single time. We have every 10 minutes because there's an issue with trading which is laggy. Okay. So yeah, price will go up and look what happened to the smart money traders. Wanted to buy here, stopped out. Wanted to sell here, stopped out. See that? They have no idea what's going on. No idea what's going on. But if you look into the liquidity, you know what's going on. See that? And even the retail traders, see that? A broken resistance might turn into a support. So they will be expecting moves like this. See that? They'll be expecting moves like this. But what happened? What happened? Now they're falling back down. Look at that. Once you enter with liquidity, this is the reaction you get. 60 pips instantly. Instant 60 pips. Okay, this is the reaction you get every single time you enter with the liquidity. Look how hard it's falling. Okay, it will fall back down like crazy. Okay, so it dropped back down. And then, yeah, let's go to the 4 hour. Let's go to the 4 hour. And then look at this. This liquidity okay, that is what shows you that a huge reversal is about to happen, right? Can you understand that? When there is liquidity like this, you can expect a huge reversal to happen all the time. Okay, all the time. So then now look at this. A reversal is about to happen, right? Look at all of this liquidity getting built up. A fake resistance. Okay, a fake resistance. And then what happened? Now they're falling. Now they're falling like crazy.
Yes. That was huge.
Look at that. Yeah, like if you took a sell there, you are still in profits. See that? If you took a sell there, yeah, that was like 600 pips, I guess. Yeah, almost 600 pips.
Yes.
Okay, so that's the thing. You understand the concept, right? Where is the liquidity? Entry below that. Where is the liquidity? Entry above that. Okay, always like dodge their traps. Like see, even like how many times did they fool you? Look at this breakout structure. Look at that fake breakout structure when it taps here. How many sellers are induced here to get their confirmation entries? See that? How many traders are induced here? Okay, like if you go to a lower time frame, look at the reaction they gave. Okay, look at that reaction when price tapped into these areas. Look at the reaction. Why? Inducements. Okay, inducements. See, like a 30 pip reaction, and then what happened? Straight through it. Straight through it. Tapped into this, and then it dropped. Okay, that's the thing. Okay, so you have to always pay attention to like all of the liquidity that is getting built up. Okay, that's the main thing. Okay, you have to pay attention to that. And yeah, that's it. A very simple trade. A very simple trade. Like look how they fall all the time. It will come into your entry like super fast. Okay, but like what have we been taught? Do not catch a falling knife, right? Do not catch a falling knife. So who would want to enter it here? Look at how it's dropping. A very quick move and then a very quick move to the upside. See that? Okay, so you have to always pay attention to all of this stuff. Okay, because we're price action traders, right? We have to pay attention to everything that price action is showing you. Okay, everything. So that's the thing. It dropped back down very quickly, cleared out all of this liquidity. So we entered here and then it started going up. Okay, very simple. Can you understand it? Yeah.
Yeah.
Okay. So
So
that's about
I
that.
have
Yeah.
some doubts. Can you please
Okay.
give me the access to the annotation tool?
Yeah, I think I have given you permission.
Yeah, yeah.
Yeah.
So can I mark?
Yeah, yeah, sure. You can do anything.
Um, See, one thing I always got confused about is this
Okay.
thing. You see this thing, this wick.
Okay.
The whole of this wick is an unmitigated zone, right?
Yeah, it's an unmitigated zone.
So what I will do is I will
Yeah.
wait for it to come down here and wait for a QM or kind of a
Into
just
the
a
wick.
form, and yes. So
No.
that thing always get into a
Yeah,
confusion.
that's why I told you the closest one. Okay, the closest one. What's your closest one? What's your closest point of interest? Now, when I
So
say a point of
you
interest,
are saying
yeah,
that here we have an imbalance. That's the reason
yeah, that's the
you
reason.
took this
That's
one.
the reason why I'm taking it exactly. Now, if there was no imbalance, if it was only this week, for sure I'm going to use the week. See that?
Okay,
For sure I'm going to use the week. Okay, but if there is nothing like that, now in this example, let's see that there was no imbalance, so we could have used the week.
okay,
See that? We could have used the wick because why? The imbalance was up here. Okay, so then you could have used the wick. But yeah, in here, the situation is different. We had a little imbalance right above the liquidity. See that? Right above the liquidity. So then you can use that. Okay?
okay.
So yeah, that's about that. And yeah, so is it clear? Let me know.
Yes. And
Yeah.
one more thing.
Okay.
Where is the dot? Yeah. Mhm. Okay. Here you took the body, candle body
Which
comes
one?
as the zone.
Yeah.
So why
Yeah.
did you took that as a zone?
Why didn't I
I mean,
use this as a zone?
why did you consider the body as a zone?
Now it's like this, okay? Now this is an order block, right? The last push up before the push down. Okay.
Okay.
So in these types of candles, in these doji types of candles, the volume of this candle is in the body, not the wick.
Oh,
Okay, not the wick. It is in the body of the candle right here. Okay,
okay.
like if you go to a lower time frame, you might see that yeah. Okay. See that? Now, yeah, you can't actually see it on this time frame. Okay. Yeah. Maybe on this time frame. Okay. See, the volume is always in the body. See, lining up with that level, there is another order block. So even in this candle, the volume is in the body. Okay. The volume is in the body, and you might even have a breaker block in this area. Yeah. See that? Okay. So the volume is always in the body. Okay. So keep that in mind. So you don't have to mark out that whole area. Like I'll show you another example. Yeah, right here. Okay, look at this.
Mhm.
You don't have to use the whole thing. You don't have to use the whole thing because why? The volume is always in the body.
Mm.
See that? The volume will
Yes.
be in the body in these types of order blocks. So you can mark this area out like this. So where will price come into? See that?
Oh.
Right into the body. Okay, that is where that is where the volume is. Okay, the wicks mean nothing. The body is where the volume is. Okay, so keep that in mind. Keep that in mind. You can always mark out the bodies of the candle when looking at order blocks. Okay, when looking for POIs, you can always mark the bodies of the candle. Okay, can you understand it? Yeah.
Yeah, sure.
Okay. So that's about that. So you understood this thing, right? A picture perfect example of this thing.